Well, ladies and gentlemen, thanks so much for tuning into The Scoop and joining us here at Emergence in Prague. Couldn't think of anyone else that we would need to have, emphasis on the need, on the program. Samantha Bohbot of RockawayX. You're a partner of the event and also based, well, you're not based here, but the firm is a proper Czech firm. So we had to have you. Thanks for taking the time.
Thank you for having me.
Of
and
course.
We're excited to be here.
So we can start, at a high level. How's business?
Business is good. So maybe I'll give a little introduction to the firm and where we sit and why I feel like business is good. So we were founded in Prague, actually out of a private equity firm that has operated here since around early 2000s. So they had a big exit that was like Amazon. They've always been in e-commerce in Central Europe and always looking at new tech. They got excited about crypto in around 2016, 2018, and eventually were our anchor backer to start RockawayX. So that's our crypto company. We think of ourselves as kind of investors and operators in this space. So we run an early stage venture fund. We're now on our second fund. We also run a credit fund. Maybe I can get into that, but it's sort of being a private lender to crypto companies and protocols. And this gets at why Prague is still in our DNA, not just kind of like where we started off and went global from, but we have a really large engineering team. And so we own and operate our own data centers here, out of which we run validators and other servers, hardware that supports crypto projects. And we have a big engineering team here working on a lot of different things at once.
I didn't know about the credit fund. That's pretty interesting. We'll definitely have to talk about the launch of that. Let's start with maybe the operating side. So are you guys incubating businesses and products? What does that look like?
Yeah, so we've incubated 2 companies in the last year. The last one actually just was spun out about a week ago, or at least its fundraise. So being away from the mothership was announced. It's called Schumann. It's a euro stablecoin issuer. And kind of how that works is we don't sort of sit there. I think the venture studio model is really hard, right? So the idea that like one in so many companies, startups are successful, that you can sit there and just kind of stroke your beard and say, what do we start next? Probably isn't repeatable success. So usually it starts from us looking into a space, and often with the cap of like, is there a company we'd want to back here, right? We think there's a market. Maybe we've seen some people approach it in different ways. None has stuck, but we still think there's something attractive. Then we might find a team doing it in a novel way that we want to back or not, and have some idea of the ideal configuration. And that's kind of what happened there. So we looked at every euro stablecoin company on the market. We looked at their licenses. We looked at the teams. We looked at like commercial exchange connections. Nothing felt quite right. So it was like making the band. Finding a good guy, finding a good crew, being a little strategic in the early days, and then seeing them grow up and fly off.
Yeah, that makes sense. It's interesting. Maybe going to the more of the investment side, but it's related to this as well. This concept of innovating and building in Europe. You probably saw it too. This really bizarre. This wild chart that indicated like.
I like a wild chart.
It wasn't really a chart actually. It was more so like an image, and it had all of the major tech companies launched in Europe. Illustrated in like sort of bubbles or circles, juxtaposed with the major tech companies launched in America over the last 50 years. So obviously the American bubbles, Amazon, Google, are these massive
This sounds like a
bubbles.
Classic Statista.
And then, yeah, exactly. That you find
chart.
like doom scrolling on Twitter
Yeah.
or Instagram. And then obviously the European companies are much smaller. It's just the European companies are dwarfed by the American ones. You guys put out, or at least historically have done these reports around entrepreneurs or the crypto ecosystem in Europe. Do you feel like there's a disconnect between like the sort of this narrative that European innovation and tech is sort of dwarfed by America and like kind of middling versus, what you're actually seeing on the ground?
I think a lot of what's hampered kind of startups in the past in Europe, some of it is echoed in crypto and some not. So the most obvious has been you're dealing with fragmented markets, not in the crypto sense of fragmented chains or assets, but you're dealing with
a lot of countries.
Different markets. And it is, it's hard enough to get something off the ground in one, right? That needs local infrastructure, partners, this, that, just cultural know-how. Scaling across, it takes a lot of capital. It needs people who buy into your vision to set it up somewhere else, but probably are from that place. And so I think that's what's just been tricky to scale. In the US, you start and you have, if you're a consumer, you're looking at a 350 million strong market. You don't have that in Europe.
Of people that mostly all speak the same language.
Yeah, a homogeneous group to sell into. And then you've had, and then from employment to other regulatory stuff, you've probably just had a more supportive and permissive entrepreneurial culture. So I think the interesting one is the borders, the physical borders shouldn't be as much of an impediment for a lot of this, maybe originally in exchanges. So like a Coinbase versus a country exchange in Europe is going to face the same kind of size problem. But when you're looking at protocols that can serve anyone anywhere, right, and are digitally native.
You're thinking about like a
bridging
solution.
Those
doesn't
should
matter.
be, if you're a guy in your parents' garage and you're really smart.
Well, if he's in Europe, his parents probably don't have a garage.
He could be a nice suburban guy in Europe. He's out you've spent a lot of time in London. Maybe he's in Henley.
Yeah.
He's got a little garage. He knows he's damn smart. It's going to be an uphill battle still to start a, direct-to-consumer traditional business. Maybe he's more tempted to flirt with crypto because he says, you know what, I could start the next Aave. And I'm not going to be held back by being based here.
So, okay, that's really interesting perspective. Aside from sort of geographies, what segments are you noticing, gain some traction in this cycle? In the post-Trump sort of victory world, has anything from a investment perspective, everybody's talking about the regulatory regime changing, that's obviously going to change. But anything from what categories of companies are interesting, has anything changed on that front?
Yeah, so I think, my first kind of reaction when you ask that is there's the price stuff and the noise and the markets. And then there's hopefully what we do, which is looking at what are going to be enduring businesses. I think those two cross more. So, in venture, I'm seeing, I think a lot of VC funds are tempted to now wear a liquid hat or VC in the front, liquid party, degen at night. We can table whether that could get them into trouble with deviating from your mandate, but I think that's there. If I think of what business is, so what's happening now that I think, okay, this price uptick, other changes in the environment are going to make for things that will succeed 5 years from now, because that's our horizon. I think a lot in DeFi. And so in the, I think for a while, there was just not a lot of new stuff in DeFi where people would sort of look at a lot of these protocols and they'd say, none of this is stuff I can't do in traditional finance. And I'm not, it's maybe the odd thing, the odd pop on Pendle, there's attractive yields, but I'm not building a diversified, institutional portfolio on chain, right? I can't be a DeFi institutional manager. And I think that's exciting now, and mainly because of two things. With the Trump one, if there is a looser regulatory environment, you can have actually fee-generating protocols. You've probably talked about this with other DeFi folks on your podcast, but they should be more transparent in being able to pass on fees to users.
Well, that's why you saw a huge rally in all the
exactly.
DeFi tokens.
And then the tokenization stuff, if there's not different types of assets on chain, the coolest lending protocol or the coolest perp DEX, right? It might be nice mechanics, but it's not that interesting because you're betting on the same, often correlated assets. Now, if you're bringing more of these traditional assets on chain, then you see the benefits of all that kind of composability, right? So where I can put my, my share in a real estate fund up as collateral to get a loan. All of that becomes more interesting when there are varied assets on chain. And then I think just more sophistication, like an interesting thing in crypto. So I've been in this a while, not as long as you, but
no, I think
but kind of
just as long.
At different moments in the cycle, like with DeFi, someone will start to raise for kind of the next frontier. So they'll say, institutional money's coming on chain. I want to do like an exotic options. But yeah, I think maybe I can tell you, because there's one thing we're excited about. So we just, to give an example of like, well, what's new? I'm a guy, I want to do something cool on chain. I don't just want to bet and speculate on meme coins. What's actually this financial activities I can do?
Well, how is crypto actually melting into the real world?
Exactly. So we just set up, there's a project called Idle. It's an investment platform in DeFi. And out of our credit fund, so we're a 3-year strong institutional lender. I'd like to think we're kind of top line underwriting, kind of pros in the room. What we've done is structured a loan to FalconX. So that's a kind of, we think, a mature, stable business, but that has difficulty accessing traditional private credit, right? A bank might struggle to lend to this business still. We've structured a loan to them. So we've set the terms, we've set how often they have to report to us. We think it's a good deal for our LPs who are qualified investors. What we've done with Idle is we've set up a pool, and the code basically codifies the agreement we have with FalconX. So that's a B2B loan. But now any user can come and deposit their stablecoin or any asset and access the loan at the same terms. So it's kind of like P2B, instant lending. So they do it instantly. They know it's fair. They know they're getting the same private credit terms as the big guys. And it's something new.
That's interesting. So you guys have been, what is the state of crypto credit right now?
It's not where it was kind of at the peak. So a lot of folks exited the market for obvious reasons.
What happened?
I try to forget. It was a bad night's dream. But yeah, there are very few lending shops that are kind of professional. And the reason, I think also it's a bit of asset class.
Can you share some data around like origination or what volumes look like for you guys?
For our fund or?
For the credit vehicle.
So our fund now is about 80 million that we're putting to work mostly directly on chain. So it's kind of any yield opportunity, any working capital to protocols or in these kind of lending credit products. The market's small, I think, because it has a bit of asset class schizophrenia. So what I mean by that? Yeah, so like if I go to, you need to raise money, whether you're going to be set up as a company, like a lending desk or a fund, right, a credit fund. If I go to traditional LPs, like family offices or endowments, and I say, hey, I want to talk to your fixed income guy. I've got a product under the fixed income category for you. We do about 20% per annum. It's a great product, 3-year. They'll take the call when I just give those numbers. I say it's open-ended, blah, blah, blah. But then when I come in and I say, oh, and we're providing liquidity to Wormhole protocol and perpetual dexes, they'll laugh me out of the room, right? Because they'll say that is not fixed income, right? That's not next to my Blackstone private credit or whatever, because that's alternatives. But this is just not in our wheelhouse. And they'll say, you know what, just talk to the crypto guy. We've got a guy, he's over there, talk to the crypto guy. I go to him, I think still, for a long time, the crypto guy, he just thinks crypto venture capital. Like to him, crypto as an institutional investment class is alternatives, it's VC, that's what it is. It's not sort of the credit, dealing on chain lending or other asset types. So we've had a hard time fitting it in.
Yeah, but it's an opportunity. I mean, a lot of Block Tower also obviously has a credit arm as well. Yeah,
and I think there's a lot to be excited about. I mean, right now, like DEX volume is about 4% on futures, right? That's so small relative to how many people and capital is on centralized exchanges. It's a bit of a self-fulfilling wheel, right? If more of that comes on chain, then there's more liquidity, then there's more investment opportunities. there's more track records and there's more folks that will spin up these funds and kind of make it part of asset allocation to crypto.
It's been tough market for new fund launches, but I feel like we're at a moment of shifting.
What are you
To
hearing?
a more favorable. Well, I think you're going to see a lot of people try to launch new funds in the wake of this price action.
Yeah,
it's just inevitable. And then you had a lot of fund managers
would you invest
wash
in
out.
A new crypto fund right now?
No,
Why?
because I think I'd do better than most managers. So what am I going to give them my money for? I just go direct. What about you?
Well, we just closed a new fund. And so I do sit up at night thinking these people
So how fast do you have to deploy that fund, do you think, in this environment? Does it shift from 12 to 18 months to 6 to 8?
No, because it's a bit of chess, right? Like, they kind of say you're only as good as your last fund. So we did really well in our first fund. That feels like a high performance burden here. And I think we know across traditional markets, it's not really individual selection that makes you. It's kind of asset allocation, kind of the big decisions. So we're sitting on this new fund. We have our giddy LPs that are excited. Some of them
good companies in the portfolio. Wormhole. Solana.
Yeah, there are good companies, but we have to be careful. Like if things get really frothy and we deploy, right? So we take their capital, we deploy impatiently, and the market turns a bit, then we're only as good as our last fund. So to your question on how quickly we deploy, I think it's a bit of a bottom-up game in VC. It's like you pick deals on individual merits, founders, and pricing. So if we can find deals that meet that are cheap, and if that changes, then we'll sit on our hands for a bit.
Interesting. Well, that'll be a Herculean task.
To sit on our hands?
Yes. That's probably the hardest thing. What is the
lose circulation fast. Yeah, it's tempting.
To do nothing is the most difficult thing.
Yeah, and everyone wants to pile in when things are good. So I think, we're thinking about that a lot. Like, what's the right pace? Do we trust our gut that, we can hold true to individual assessment and say, is this well priced, or do we say at some point we just want to slow it down, right? Top down.
And walk us through maybe not necessarily the metrics, but the sort of indicators that you look towards in identifying when to change your thinking. Is a little bit of that,
Yeah, so I think there's a lot of, I think a lot about if I'm talking to an LP, why would I invest in our fund? And as you said, right, kind of like traditional assets. Like if you're an active manager, you're charging fees and it's probably zero sum. Like as many are going to underperform, just the betas outperform. So why do I think we can do that in a repeatable way? And I think that has to be that you have some way to source and pick investments better than the rest, right? And I think that only comes if you have some focus. So I look around and I like a lot of our peers, but I think just saying I'm an early stage venture fund is just scarily broad, right? So for us, and maybe because I'm a framework gal, it makes me sleep better, is just thinking we have real areas of focus. We have real areas where these are our kind of buckets. And if we're going outside of them, there has to be a really good reason. And so for us, that's Solana. We were an early investor, seed. We're really close to the team. I think we know it well. We run infrastructure on it. And then the DeFi stuff, because we're also a direct participant out of the credit fund. And we see things earlier because they want our liquidity and we can command better pricing. And so, on when I think, if for us, I already think things could get frothy fast. So that makes me just want to hunker down into the two areas we really know.
That makes sense. Principles, sticking to them, not wavering.
And I think deals feeling crowded. So there's this feeling right now.
Well, that's sort of tied to the whole unique KOL element of crypto, where companies are going to want every single name on the cap table just so that they can be affiliated with all of these
like
firms.
yourself, they want Frank Chaparro on their cap table
or whomever. But
yeah,
but the deals. I wonder if that sort of translates into a less competitive element in crypto and crypto venture investing compared to others. Because at the end of the day, you're going to be on the same cap table as so many of the same people every single time. And it's really a game of like, how do I get as much allocation in a given round? Because most of the time it won't be hard to get in the round. It's about getting the size that you want.
Yeah, so I think and as that starts to happen, you see VCs staffing up their value add divisions, right? And saying, this is how we occupy a unique seat on your cap table. We're not like those other guys.
We're not like those other moms.
We're not like those other moms that are going to pontificate, and we're the cool moms who have this special value add.
We're going to help you hire engineers, or
that'll start
enter a new market.
I mean, that's the other signal I've been thinking of. Like at some point in the cycle, everyone starts to be hiring, and new recruitment firms sprout up of nowhere, and they send you candidate lists, and then you get really disappointed when you contact one and they're not really on the market of 8,000 and they were kind of a teaser. Like this, I haven't seen start yet. But yes, when that happens, everyone will be vying for their.
What does being a value add investor mean to you?
I think it still comes down to focus. So when people tell me whether they're like the platform, so the person on the VC team that thinks about post-investment, when they say, oh, we need to make a list of all the functions of a startup and think about how we help across all of them, I think that's so much, right? Like, I think there's one thing you can add. So, you're not going to become a PR firm and a recruitment firm and a developer studio. I don't think you can do it all well. And I don't think you should do it well, right? Like if the founder builds a good group around the table, there should be a thought process of what can each of them uniquely contribute. And so for us, like I like the idea, maybe it's a little too cute, but I like the idea of a service contract. So we write a check, we hold an onboarding session, and we say, what's like one, I don't want to talk about 8 million things we can do for you that then we drop the ball. What's one thing that if we deliver it in the next, call it 3 to 4 months, you will be very pleased with us as a partner. And then we can iterate again. But like, let's just hold ourselves to the fire and do one. And then I'll be ashamed if we can't get on the call and at least give you an update on it, right? But I think the getting on the call and asking for frequent updates and wasting founders' time and then saying, well, maybe we can help across all these things, that's probably the worst side. What do you think? Like, you talk to founders a lot. What do you think when they say, I really like these guys, like I love that VC, what do you think that boils down to?
Well, I think so much of it boils down to marketing these days and just figuring out how they can cut through the noise, especially in an ecosystem, in an industry where a meme coin can outpace you in market cap just overnight because of someone tweeting about it or whatever have you, it becoming the coin du jour. So I think when they think about an investor who can help them cut through that nonsense and have visibility in the market, I think that's probably one of the most important things. Being the mic. And then obviously, I think to your point, recruiting will become important once these companies go from 10 people to 30 or 40 or 50 or whatever have you, and as they start to build out like a proper C-suite. But right now, I think marketing is kind of paramount, in addition to like liquidity as well, and helping navigate complex capital market questions of, how do I go through my TGE? How do I get listed on the right exchanges? Partner with the right liquidity providers. These are unique challenges to crypto for CEOs. Typically when you think about going public, that's done 5 years, after you sort of, after the inception of a company. And in crypto, it's, 5 weeks.
Yeah, you've multitasking founders.
You have to have founders that are not usually good with marketing. Marketing's very expensive and difficult to estimate ROI. You have founders that have to deal with that because of this problem I described with the sort of noise of crypto and the nonsense and the mania, as well as sort of these capital market thorny challenges that are also, again, unique to crypto. I'm sure there's others, but those are the two that come to mind. And so investors who can help companies navigate those two challenges, I think will find themselves on more cap tables.
Yeah, I think that's true. You can.
That's like the longest I don't get people asking me questions on the show. So,
well, who has more to say than you? If you talk to all the people, you're the mind hive.
Yeah, I don't know.
So I'd want to hear what they all say via you. You're the mic.
Yeah. I guess so. I'm not that mic though. Oh my.
But yeah, I think it'll be I think the other thing you start to see, and it gets scary, is when like the scrounging becomes worse for building things that last, right? And so what I mean by that is, in the past cycle, obviously you started to see vesting get shorter and shorter, right? Because one investor comes and says, I'll give you the money you want. You want cash to grow, I'll do it. And by the way, I'm okay with if the team vests the day the token launches and you've delivered nothing of value. It becomes a race to the bottom on like holding to the ethics that you think the space should have, right?
Is that getting better or worse?
I think right now it's interestingly possibly getting better from the exchanges. So not from the VCs commanding that.
Yeah.
The VCs, I agree, on the crowded deals, it's the elbows out and trying to ingratiate with teams and give them whatever, even if it feels a bit suspect. I think it's exchanges that are saying, look, fine, regulatory permissive now, but we don't want to run afoul of what's right. If you're going to list here, we want to change the vesting terms to be longer for the team and the investors. And we also want them, maybe they'll be dilutive. If you have to do other things that are good for the community, these people don't have some sacred right to the best return. So I think right now they're being more assertive.
That's interesting. I haven't really noticed that the manifestation of that dichotomy.
And I think because they are the kingmakers now, especially with because the conversation is about price, right? And you said the marketing, the noise, like, do we get the day one listing? One, they are kingmakers. Two, that makes them kind of the guardians of the industry. And I think a lot of us then are kind of turning to them to set the right path.
Yeah.
There's a lot of responsibility they hold because they are the bridge to people on the outside. Many of whom experiencing this for the first time, right?
Samantha, thanks so much for taking the time.
Thank you for having me, and thank you for you and your colleagues for putting on such an amazing conference here. We're really excited to have the crypto global community in Prague. So
the Czechs are very excited. We're going to have, it's possible, the Prime Minister here at the event.
That's big.
Yeah.
That's big. So, yeah.
Děkuji.
Na zdraví. Dobrý den.
Dobrý den.